they acknowledge the fact that there is cross-border influence. All the law is doing is it's setting a framework. And it's saying that within this framework, you are free to get foreign donations.
I was looking at the data and it said from 2017 to 2021, India received 50,000 crores of foreign funding.
Every last rupee, dollar, euro that comes into the country has to compulsorily be deposited in the NGO's account maintained at State Bank of India, Parliament Street. You can't have a web of NGOs where one nodal NGO receives the money and then disperses it to multiple NGOs. This noise seems to emanate from certain vested interests. One of the things that this amendment is bringing about is, if you've received foreign funding and you've acquired property in India from the foreign funding, see, this is a very nuanced position. The property has to be acquired from the foreign funding, not from your domestic sources of income. You try breaking the law in the UAE and you see the repercussions of that.
Yes, round tripping. Internet is full of the debates and information around it. So how does money leaving India appear as foreign investment, and people try to play around this? Great to have you on the show, Himanshu.
Pleasure to be here.
So Himanshu, foreign funding is one of those subjects people have very strong opinion about, and they form these opinions without much of evidence. So my attempt today is to understand and separate what is legal, what is suspicious and all that. So I'll let you begin. My first question is why the NGOs are very dubious when it comes to foreign funding, at least the perception.
So why they're dubious is a question I may not be able to do justice to, because, like in any sphere of business and life, you have good apples and you have rotten apples also, right? So there are certain NGOs that are genuinely doing very good work on the ground. Then there are certain NGOs whose antecedents have been questionable in the past. But I think what we need to really understand is what is the whole regime around foreign funding, and how does it impact not only the NGOs, but the last mile at the grassroots? How does it really impact, and what is the thought process of the government in that? I've had the opportunity to work on FCRA for many years now, and I've seen the legislation evolve. But Janmejay, before we go into where the legislation is today, I want to just share some thoughts with your viewers on the fact that India today is being needlessly vilified for having come up with the amendment for FCRA. The US, which is supposed to be the flag bearer of human rights, democracy, freedom, they have an act called FARA, which is the Foreign Agents Registration Act. This came into being after 9/11. The UK has something called Foreign Influence Registration Scheme. So they acknowledge the fact that there is cross-border influence in the UK, and they're trying to curb it. And this is an offshoot of their National Security Act, which came out in 2025, which, as we all know, is a very draconian act in the UK. Canada has something called Foreign Influence Verification Scheme. I may get the name a little incorrect, which again requires all overseas money coming in into lobbying, into going to non-governmental sectors to not only be registered but actively monitored by the state. Now let's look at what India has done traditionally and what they're doing today. India has a law called FCRA, which is Foreign Contribution Regulation Act.
Yeah.
First and foremost, we need to be very clear that the law in India does not propose to regulate your activities. All the law is doing is it's setting a framework. And it's saying that within this framework, you are free to get foreign donations. As long as you follow the prescribed checklist of what can and cannot be done with the funds, the government does not require any further monitoring, policing. It is a self-certification. You have to file an annual return every year, which is no different than, under the Companies Act. Every company, or under the Income Tax Act, you have to file an annual return. Similarly, you have to file an annual return under the FCRA, which basically is a declaration of receipt and utilization of funds. Now, in the past, what had happened was that there were certain NGOs who were, let's say, getting $1 million.
Right.
And out of that $1 million, $700,000, $800,000 equivalent was being spent on acquiring lavish assets, on jet setting around the world, and on dispersing expenses and salaries of office bearers. So what happened is that the intent with which the money was coming in, the altruistic intent of people globally who wanted to do something for the grassroots, underprivileged people of India, and I'm talking about a time when India really had a lot of underprivileged. I mean, now a lot of people have been moved out of the below poverty line. That intent was getting corrupted. So, and as a result, India as a country was getting a bad name. And of course, under the garb of foreign funding, and because there was lack of transparency in terms of how the funding was utilized, some of it was being siphoned and diverted into activities which were prejudicial to the interests of the state.
So they could avoid the scrutiny of FCRA by some random names, like this is administrative expenses.
Absolutely. And there was no cap on that. One NGO used to receive the funds, and there were multiple NGOs that were created underneath, and the funds used to be diverted to them. And those days records were not digitized like what they are today. They're not linked to your Aadhaar and PAN. So it was very difficult to trace the money trail beyond a point in time. And in some instances, I won't say all, but in some instances, there were cases that were uncovered where the money was used for activities that were prejudicial to the interests of the state. And then, of course, whenever such activities happen, there is one or more sections of the society that does get negatively impacted. So let's look at what the government has done over the years. This is not just what's happening now. What's happening now is a very, very small subset of what the FCRA...
You want to say the government has enough data and observation of pattern that has been happening since last decade or something like that?
Yes. In fact, if you look at the parliamentary notes around 2020, 2020 was when a major amendment to FCRA came into being. So if you look at the parliamentary debates around that, the government actually tabled a plethora of data before the parliament, justifying why it is proposing the amendments that it did back in 2020. Now, I think it's very important for us to look at what were those amendments, because that is the genesis of what is happening today. In 2020, the government came up with three groundbreaking laws within that amendment. First was, there was a centralized account opened at the State Bank of India, Parliament Street. Every fund that comes in, every last rupee, dollar, euro that comes into the country has to compulsorily be deposited in the NGO's account maintained at State Bank of India, Parliament Street. Now, that doesn't mean you actually have to physically have an account at Parliament Street branch. The State Bank of India Parliament Street branch has, you can open that account in various designated branches of State Bank of India all over the country. So what that did is, there was a centralized repository and a centralized database that was created where the government could view where what money has come into which NGO's account. The second thing that the government did is they capped the administrative expenses. Now, let's say you're getting $1 million into your kitty. In the particular financial year in which you're getting this money, not more than 20% of the funds can be used for defraying your administrative expenses. 80% has to be utilized for the purpose for which the money came in. Third thing that the government did is that the FCRA registration, see, earlier what used to happen is NGOs used to say that I am opening a Section 8 company, or under the earlier law, a Section 25 company, for benefit of tribals in Madhya Pradesh, for example, right? That's a very broad area. Now, benefit could mean anything. And that, because you see, where there is vagueness, there is scope for abuse of the law.
Absolutely.
And, there are loopholes and enforcement becomes difficult. What the government did is that all registrations of NGOs, fresh registrations, and whenever the renewal of the registration comes up, there has to be specificity in your focus areas. So if you're an NGO that wants to work for the welfare of tribals in Madhya Pradesh, your registration should now say that I am going to utilize these funds to set up schools in, let's say, district of Dhil in Madhya Pradesh. I'm going to set up 10 schools, and for this I have received $1 million. And within that also, I am going to use these funds to set up the building or to procure textbooks, to get smart boards, to pay teacher salary. So it has to be a very great degree of specificity so that there is no abuse of the process and the funds are utilized for the purpose for which they were raised.
At least claimed.
Or at least claimed. Like, whenever there are natural calamities, there are donors across the world that send money. Donors in India send money to flood victims, earthquake victims all over the world. So it's a symbiotic relationship that, humans have at a global level. So now if there are funds that are coming in for earthquake relief victims, then the NGO that is collecting the funds should be registered to actually provide relief to earthquake victims. And even there, what aspect of relief? Clothing, shelter, medicines, housing, food, water, what is it, right? So you have to be very specific. So the government has kind of brought in that degree of transparency.
Which is fair enough.
Which is actually fair because the funds should be used for the purpose for which they were sent.
Yeah, and if you're noble, if you have a noble objective, then why not?
And then the fourth thing that was very critical was the government banned movement of funds from one NGO to another. So there can be no subdivision of funds. So you can't have a web of NGOs where, one nodal NGO receives the money and then disperses it to multiple NGOs. Now, the one that receives it has to expend it. You get the money into the state bank account. Thereafter, you can have additional FCRA denominated accounts in different banks. It does not have to be State Bank of India, but all the money has to flow from the State Bank of India into the different denominated accounts, but those accounts have to belong to the same entity. It's the same trust or the same Section 8 company. So with this, now what the government has done is they said, look, these are the set of rules. We are giving everybody the benefit of doubt, saying that when you're opening an NGO, you're doing it with the best of intents. We are not questioning your intent. These are the rules within which you receive and you disperse the money. No questions will be asked from you. But if you deviate, then of course you're breaking the law of the land. And then whatever are the penalties that ensue, whether it is freezing of accounts, whether cancellation of registration, and in extreme cases, penal provisions, they will apply like in any other country.
Now, what is the misinformation being spread around by the oppositions and other religious minority groups? Is it because the laws are being tightened, or the screws are being tightened?
See, I don't want to comment on the political aspect of it, but as a citizen of the country, not as a lawyer, but as a citizen of this country, when I look at the noise in the ecosystem right now, this noise seems to emanate from certain vested interest because of the amendment that has been tabled before the Parliament and it's pending consideration by the Rajya Sabha and the Lok Sabha. Before we go into the areas that people seem to have an issue with, I want to put one thing in front of your viewers, which no media house, nobody has ever brought to the fore with respect to the new amendment. Under the current scheme of law, violation of FCRA provisions carried a prison sentence of 5 years. Under the new amendment, that has been reduced to 1 year. Is anybody talking about that?
No.
The government is actually making things easier.
Yes.
What the government is saying is, if you're a law-abiding citizen, we want to empower you. But if you break the law, then of course. Yeah. But even there, the government is going more towards penalties than towards actual imprisonment. But nobody is talking about this because this doesn't suit certain narratives. Now, coming to the so-called perceived problem areas under the law. See, one of the things that this amendment is bringing about is, if you've received foreign funding and you've acquired property in India from the foreign funding, see, this is a very nuanced position. The property has to be acquired from the foreign funding, not from your domestic sources of income, because you are not allowed to acquire property beyond 20% of your funding, because those are under administrative expenses. And if for any reason your FCRA license is cancelled, now why will it be cancelled? Because you've not followed the law, right? If your FCRA license is cancelled, then the government is setting up a designated authority. The designated authority will take over those assets till such time your registration is renewed. So if you renew your registration, that means you are back in compliance. Your assets will be handed back to you. If you do not renew your registration, if your registration fails to get renewed, then the designated authority is duty bound to use those assets for the same philanthropic purposes for which you had acquired those assets, at least on paper, right? So the government is not going to misuse those assets. And if once the object is completed, right? Because, for example, if it is for earthquake relief victims, once all the victims have been rehabilitated, the object is completed. And if you've set up a trust under the Trust Act in India, the trust can have a finite duration or a finite purpose. When the purpose is completed, the trust automatically stands dissolved. And a lot of NGOs are either Section 8 companies or their trusts. So once the purpose is achieved, then what happens with that asset? The designated authority is supposed to dispose of that asset, and the funds realized are sent to the Consolidated Fund of India, which is a government central fund, which the government then uses for all its public welfare schemes. Right? So this is the crux of it. Now, if you are a law-abiding NGO, this amendment should not make any difference to you.
Not at all.
Because you are doing your activities, you are operating within the sphere of law, and you are filing your annual returns, and then there's no question about your assets ever being acquired by the government. But if you're an NGO that is not following legal principles, who apprehends that their registration may be cancelled, of course you're going to have an issue. It's like you're staying in an illegal house.
Yeah. It's
right?
like a visa renewal as well.
Exactly.
It doesn't automatically renewed after a year.
Yeah. So if you don't follow your visa rules, your visa will get cancelled.
Yeah.
You don't follow. I mean, you like going back to my analogy about staying in an illegal house. You're staying in an illegal house. You know it's illegal.
Yeah.
The government has the right to demolish it at any time, right? But if the government starts demolishing and then you start crying victim, then who's to blame there? Is it you or the government, right? Because you're the one who made the mistake. Your neighbor may have a completely valid, sanctioned, permit backed house. He or she will have nothing to worry about, right?
Yes.
So it's the same concept. So I feel that the whole noise that is being created around it does not have. It's not strictly because of what the legislation is. It is because what certain people fear could be the outcome once this legislation is passed, because the facades that were built over the years will end up getting demolished. And now the law has teeth for the government to actually take corrective action.
So can a perfectly legitimate organization, let's say they do any reporting mistakes under this new amendment rules, can they also come under unnecessary scrutiny? So
there are enough safeguards built into the law that, if you don't file your return on time, if you file incorrect returns, there is a show cause notice that is issued to you. There is an appeals provision. The courts are always there, right? You can always go to the court in a writ if you are aggrieved by the order of the adjudicating authority. And it is only when all of these avenues are exhausted and it still is held that you are violating, only then your license will be cancelled.
So what is then legally permissible charity? Because religious organizations are often coming under this radar.
See, Article 25 of the Constitution permits everybody to not only carry on their religion, but to propagate their religion also. Right? The Constitution allows it. What the law also prohibits is forced conversions or conversions under inducements or on false pretexts. As long as a charitable organization is receiving funds, whether it be the Church of India, the Islamic Council of India, or Swaminarayan Temple, or even the Shiromani Gurudwara Prabandhak Committee, if you're getting the money and you're using it to set up, let's say, free kitchens, to set up your places of worship, the government is not questioning anybody. You're free to do the Constitution allows it, and nobody's above the Constitution in this country. Where the problem arises is that in the garb of getting certain money, if you are following a separate agenda. So hence, if, we go back to the point we discussed at the beginning of our conversation, that the 2020 amendment brought in specificity for the utilization of funds. If you are deviating from that, the government will issue you a show cause notice. You either satisfy the government that this was not a deviation, or if it's a deviation that can be corrected, you correct it within the prescribed timeline. If you cannot correct it, then of course there are consequences that will follow because you broke the law of the land. And one thing I find very amusing is that people, are raising a hue and cry about the penal provisions which kick in when you break the law of the land. But the same people, when they go outside India, they follow the letter and spirit of the law to the T. Because they realize that law enforcement is very, very stringent. But when it comes to our own country, people expect law enforcement to not be stringent while demanding the same accountability from the government. It doesn't work like that. It's
morally questionable.
It doesn't work like that. So if you want accountability from the government, which you should, which every citizen should, you and I should hold our government accountable for everything that they do. But then at the same time, it's our duty as citizens to follow the law. And then if the government cracks the whip, if we don't follow the law, then we should not complain.
That's true. These days, a lot of hue and cry about democratic rights, but democratic duties, that's something.
So fundamental rights is there, but there are fundamental duties also in the Constitution. Nobody talks about that.
That's at one convenience.
I mean, forget fundamental duties, basic things like civic sense. The government is making world-class expressways. People are removing the iron barricades from them. I mean, so what are we doing as citizens?
Something like the collective responsibility is not in Indian society these days. Has been all the time.
Yeah, it's like people will keep a spick and span house and their Kamwali Bai will throw kachra outside the window. So as long as it's not in my house, it's fine, right? So that mentality, till that changes, we will continue to have these kind of issues in public discourse, which is not good for the country at large.
I was looking at the data and it said from 2017 to 2021, India received 50,000 crores of foreign funding through NGOs. So my question is actually, especially about America, why is America so about this?
See, I don't know why America as a country is, and I don't think America as a nation is irked. There are certain individuals in America who have put out public statements expressing their displeasure with this. I'm sure they have their own reasons, whether those reasons are based in fact or more out of emotion. Only time will tell. But all I can say is that this is an Indian legislation dealing with how money is to be used in India. If you don't like it, don't send money. India is not asking for your money. This is not aid that the governments are giving. India is way past India is now an aid giver. It's not even an aid recipient.
True.
I mean, we're the fifth largest
why
economy in the world.
Why can't they send money to Prime Minister Relief Fund instead?
Exactly. And now I think one of the officials in the US has made that statement that, we will just send the money directly to the Indian government for disbursement. And the Indian government, see, the point to note is the Indian government is not asking for this money.
It is
Nobody in India is asking for this money. You yourself are volunteering to fund certain NGOs. by all means, India has a law, fund it within the confines of the law. If you don't like the law, don't fund it. It's very simple. Nobody's forcing you to send these funds.
So can this generally become a national security concern?
If the funds are misused, of course. We've seen what's happened in J&K in the past. We've seen what's happened in the Northeast. We've seen what's happened in Punjab. And it's not just India. The reason why the UK registration scheme for foreign influence, think about it. It sits under their National Security Act. Why? Because they apprehend that foreign money coming in can be used to peddle certain narratives. And when you combine it with the power of social media today, it has the potential to create a lot of unrest. Because if you have a large gathering, see, when I work a lot with investigators as part of my criminal law practice as well. The golden rule of any criminal investigation is follow the money trail. You follow the money trail, you will get the criminal. You'll get the culprit. If there is any large gathering that is in, against any government anywhere in the world, I mean, we can talk about the Orange Revolution, the Arab Spring, whatever, globally, right? Initially, a lot of people will do it out of enthusiasm and passion, but to sustain it, those people need to be fed. Those people need to get water. They need medical facilities. Where does that come from? You need money for that, right? Somebody has to fund it. So if it is being done for the right causes, by all means. But the same thing can be used in a very insidious manner and to promote agendas that are not in the interest of the country that is the recipient. And I'm not just talking about India. It could be any country in the world. Today, every country in the world faces both external and internal threats.
We saw that in Bangladesh as well.
Absolutely. We've seen that in Bangladesh. We've seen it all over the world. We saw it in Nepal. We saw it in Sri Lanka. We've seen it in the Middle East, in a lot of African countries. So all of this can easily be influenced and managed if the funds are siphoned and diverted. Siphoned off and diverted. So all the government is saying is that we are well within our rights to protect the citizens of this country. And it's not just because this dispensation is doing it or the prior dispensation did or did not do it. It's about the law. We're talking about FCRA, but let me take you to a different law. Today we have a law for receipt of investments in foreign currency, not grants, but investments in foreign currency called FEMA, which is the Foreign Exchange Management Act. Some of your younger viewers, Janmijay, would not be aware of the predecessor of FEMA. It was called FERA, Foreign Exchange Regulation Act. It was by far the most draconian act this country has ever seen. It is even more draconian than the UAPA, the Unlawful Activities Prevention Act. Because in FERA, because foreign exchange was a controlled commodity about 30 years ago, and any violation of FERA had the enforcement directorate knocking on your doors, and there were catastrophic consequences if you had violated FERA. It was a different dispensation.
It's like you will be booked like UAPA.
Yes.
Without any evidence.
The investigating authorities had very, very far-reaching powers under FERA. And you could be arrested in FERA. In FEMA, you can't be arrested. It's only a penalty, right? Your assets can be attached, but you yourself cannot go behind. Whereas in FERA, you could. Now, today, it's very easy to sit in judgment to say that the then dispensation, I think that was a Congress government at that time, came out with a draconian act. But for those of us who have lived through that era, we realize that the government actually came out with the right law because smuggling was rampant in India. Gold was being smuggled in India. Counterfeit foreign currency was coming into India, which could have derailed the Indian economy. So the government needed to have those controls. So it is irrespective of which dispensation is in power. If the law is for the benefit of the country, citizens should support it.
It's doing what's right.
It's doing what's right because what people need to realize is that if for vested interest or for short-term gains, some very well-meaning legislations are derailed, your future generations will pay the price for it. Right? Do you really want to put your children through that situation? Did the people of countries that were the subject of Arab Spring, did they think that something like this could happen and the future of their children would be wiped away overnight? But it happened, right? So question the government of the day by all means. Force them to bring out legislation that is favoring people. If the majority of the countries, this is the beauty of democracy, if the majority of the country doesn't like what the government is doing, vote them out. Bring somebody else in.
True.
But whoever is in power, hold them accountable. But if they're doing things that are good for the country, support your government. Because remember, at the end of the day, this is the only country you can call home. Anywhere else you go, you will always be a second-class citizen.
Yes. And you have to follow their rules.
Follow their rules. Absolutely. I mean, I also have I'm licensed to practice law in the UAE as well. So I have a legal practice there, and I spend a significant amount of time in the UAE. So I have had the benefit of comparing the legal systems and analyzing of the legal systems of both the jurisdictions. And there are certain laws in the UAE, and I have insane respect for their rulers, because the kind of foresight they had to bring in those laws made a complete desert into one of the most sought after destinations in the world. I mean, this doesn't happen unless you have visionary leadership that has the ability to execute.
It's a long-term thinking. That
execute with ruthlessness.
Yes.
You try breaking a law in the UAE and you see the repercussions of that.
Yes.
Nobody questions that, because they realize that when you're in a country, you have to respect their laws. But at the same time, you follow the laws in the UAE, your life is heaven over there. I mean, I can't think of a better country to live in from a day-to-day convenience perspective than the UAE, provided you follow the laws. Why can't we have the same mindset in India? I mean, look at the improvements India has made over the years. Sure, we have our problems. Yes, we need to...
I think execution is a problem in India.
Execution is a problem. The sheer size of our population is an issue. The lack of ownership amongst the citizens is an issue. The lack of civic sense is a problem. Corruption is an issue. Let's face it, it's there. It may have reduced, but it's still there. At the last mile, it is there. So those problems need to be addressed systematically. The government has to address them on a war footing. We're in Gurgaon. Look around you. On one side, you have Golf Course Road, which can vie with any modern area of any city in the world. On the other side, one rainfall and half the city is submerged underwater. So yes, we should hold our government accountable for that. But at the same time, if the government is doing something good, we should laud them for it also.
Yeah, true. You spoke about UAE. So there are several confusion around that, especially when investors and people invest in Dubai. It is the perception is a zero tax-free country and all that. But what are the compliances that people don't know especially regarding the tax compliances and structure in like Dubai?
It's interesting you asked me that. So, at the high level, the UAE is a personal tax-free country, which means that there is no personal income tax.
Like me as an individual.
You as an individual. However, there are like with any legislation, there are multiple layers one has to peel off. Let's take you, Janmejay, as an example. You're an Indian citizen and you are a tax resident of India because you spend more than 183 days in any financial year in India. You get a job in Dubai tomorrow and you move to Dubai, or you move your entire podcast business to Dubai, and God willing, you're doing really well there. In the first year, let's say you make $1 million in Dubai. Now you're sitting there thinking, I'm sitting in Dubai, I'm earning in Dubai. Dubai has zero tax. This is all tax-free income. You'd be right, but only to a certain extent. The Dubai authorities will not tax you because there is no personal income tax in Dubai. But because in that year, you are still a tax resident of India, that entire income of yours is taxable in India at whatever is the applicable tax rate, which in this case, if you have such high income, would, when you add up surcharges now, it would be effectively about 39%, which is something a lot of people miss out on. So you have to be very clear. Taxation has two aspects. One is what is the law of the land in which you are earning your money? And second is what is your tax residency status? Tax residency is different from physical residency. It is different from citizenship.
Mhm.
What is your tax residency? Unless you are a tax resident of a country in which you are earning income which has zero tax, like the UAE, you will not get the benefit of zero tax.
Mhm.
Right?
You mean to say if someone has a golden visa in UAE, only then the tax resident status changes?
No. Even if you have a golden visa, whether you have a golden visa or you have an investor visa, tax resident status doesn't change. Golden visa under UAE law entitles you to live in the UAE visa free for 10 years with an automatic renewal, provided the underlying basis for which you got your golden visa, whether it's real estate investment, company investment, currently spec'd at 2 million dirhams, that doesn't change, right? But the point is, are you staying in the UAE for the entire duration of the year? That is the question. Under UAE visa laws, your Emirates ID, you have to enter the UAE at least once in 6 months. Otherwise, your Emirates ID, there are certain fines that you have to pay. Just because you have a golden visa does not make you a tax resident of the UAE. UAE also has similar rules that you need to spend 183 days in the UAE. If you have an investment, like for example, if you have a golden visa, that's relaxed to 90 days. Now, you may get a tax residency of the UAE, but if you've spent, let's say, 91 days in the UAE having a golden visa, but you spent the rest 270 days in India, you're a tax resident of India. Your global income will get taxed in India, including your UAE income. So there are multiple layers you have to peel. So that's one aspect on personal taxation. Then, a lot of Indians are setting up companies in the UAE today. Companies are not exempt from tax anymore. If you have a net annual income in your company in excess of $100,000 US, which is 367,000 dirham, because dollar UAE is fixed pegged at 1:3.67. You are accessible to tax on your net income at the rate of 9%. So there is a 9% corporate tax in the UAE. In addition to that, there is a 5% VAT, which works the same way as GST does in India. So gone are the days when there was absolutely no tax in the UAE. It is still a very attractive tax destination compared to almost every other country.
Yeah, then you have these special economic zones and all that.
Yeah, so those are called free zones in the UAE. There again, there is a bit of a misnomer. So technically, free zone incomes are exempt from corporate tax. However, there is a fine print to it. If you set up a free zone and your entire business activity, entire means 100%, is being done only with other free zone companies or outside UAE, your income is exempt from tax. But the moment you do any business with a mainland company, your entire business, your entire income becomes accessible to corporate tax, which is 9%, subject to the $100,000 threshold. So, and it's very rare for any company to do business only with free zone companies, because let's say you have a transport vendor. The transport vendor has a mainland company, right? You're doing business with a mainland entity. Your business, your income becomes accessible. So it's a very, I would say today, UAE is not a tax-free destination, but it's a very attractive tax destination, provided you've done your tax planning correctly. So that is very important.
That brings me to round tripping. Internet is full of the debates and information around it. So how does money leaving India appear as foreign investment, and people try to play around this?
So interesting point, because round tripping has also the law has been relaxed. November 25 or 24, the government came out with an amendment to FEMA, and the RBI issued some revised guidelines. See, earlier what happened was, you send money out of India, you bring it back into India, that's round tripping. It was prohibited, blanket prohibition. Now what the law says is, if you send money out of India, you can invest that back into India up to 2 levels of step-down subsidiaries.
Okay.
Right? Because the government recognized the fact that there is a lot of flight of capital that happens, and India is not able to take benefit of that. So the government is attracting that money back. Right?
Got it.
Because the capital flight could happen due to legitimate reason. Like, for example, let's take UAE, for example. There are a lot of high net worth individuals have invested in real estate in the UAE.
Yes.
Now, those real estate investments, let's say they're in commercial real estate, they yield pretty significant rental yields. I mean, you can get rental yields in the region of about 8 to 10% of the capital value, which is unheard of anywhere in the world. Over a period of time, that results in significant corpus. Now, in the old regime, if you were bringing that money back into India and investing in a company, that was round tripping, right? But the government wants to attract that capital. So the government is saying you can bring it back into India and up to 2 levels. So you set up a company in the UAE. It has a subsidiary in India. That's step 1 subsidiary. And then you can have a further subsidiary also. Or you can have a subsidiary in the UAE and which has a subsidiary company in India. Up to 2 levels of step down subsidiaries, you can actually bring the money back into India. And that is now legally permissible. And what that has done is that has really galvanized the whole FDI ecosystem in India and the entire venture capital money, because that's unlocked a lot of money that was previously not available through banking channels to Indian corporates.
So can an Indian own a Dubai company or an entity and fully legally planned, but still somehow they end up with FEMA violations? What mistakes do they do?
Of course. Let me share a real life example, something I dealt with about 6 months ago for a client. There were 2 friends, very close friends. One of them set up a company in the UAE, technology company, and the company started doing very well. The second friend and Mr. A, who set up the company, moved base to the UAE. Mr. B, who was his best friend, managed all the operations in India, because in India they had a back office operation and they're doing exceptionally well. Then they decided that, look, since it's our joint sweat and blood, we both should get benefit of it. So, but Mr. B said, given the current valuation of the company, I don't have money to invest spare cash to buy shares of the UAE company. And, A said that, look, so we started it together. Why should you buy it? I mean, there's as much your company as it's mine. So, ethically, they were both very clean. They spoke with some advisor and executed a gift deed where he gifted shares of the company, 50% of the shares of the company, to Mr. B. Mr. B comes on the cap table, becomes a bona fide owner. He's running the India operations, everything. This is before this client came to us. Then there was an investment that was to be done in this company. And I was representing the investor.
Okay.
And as lawyers, we do due diligence of the target company. When I was going through this, I immediately flagged it, and we had a meeting with the promoters, and I asked them 2 questions. Is Mr. B related to Mr. A? The answer is no. We are childhood friends. I said, have you read the FEMA non-debt instrument rules? Because under the non-debt instrument rules of FEMA, a resident Indian cannot gift shares in a foreign entity to another resident unless they are a blood relative. Right? Unless they are a relative, actually. The law doesn't use the word blood relative.
And friends, of course, are not relative.
No, relative is defined under Section 2, subsection 77 of the Companies Act, which is parents, spouse, brother, sister, grandchildren, grandparents. That's it. So, if you've not done that, so if you want to gift shares to anyone who doesn't fall in the definition of relatives, you need a prior permission of the RBI. And the law says prior permission. Post facto permission, there is no provision in the law, right? They obviously didn't have it, and the chartered accountant they had consulted at that point, unfortunately, did not give them the right advice. So as a result, they were going to raise funding in certain multiples of $1 million. But I red flagged this to my client, who was the investor, and I said, this is a non-compliance that cannot be corrected. Okay. Right? They pulled out of the investment. They did not invest because obviously this is a very big venture capital fund, international venture capital, and they are very, very specific about compliances. So they pulled out of the investment. Now, these two gentlemen were doing everything right. They built a great company. And they set up the company in the UAE, completely legitimate, no violation of law either of India or the UAE. One step, they violated FEMA, and the entire edifice collapsed.
So kind of to be more aware and to have the right
Absolutely.
advisory is important.
And now because that deal was over and there was no conflict, irony is that they have now reached out to me to help restructure their company, and we're working with them, and with the clear mandate that if we were to advise them, then they cannot seek investments from our erstwhile clients, and we took waivers from our erstwhile clients to structure this for them. But to restructure, we have to completely redo the edifice of the entire business. So at times, a small mistake can be very costly. And to your question, that yes, you can do everything right, but still a small slip up can cost you, make you non-compliant with FEMA.
I was reading somewhere a personal quote of yours where you said about the promised money, unless it's reaches the account, it's not money. Maybe in some of your posts. So what happened that led you to this wisdom?
So there have been a lot of instances in my personal professional journey where the clients have given 50% fee upfront, and the balance was on completion of the transaction. And these typically M&A transactions, and we had written engagement letters, contracts, everything, and there are a few instances where I haven't seen the money to date. So my then business associates celebrated once the deal was done, that okay, the deal is done and now we're getting X amount of money. And even I said yes, we're going to get it. And in a couple of instances, we made the mistake of incurring expenses, assuming that money will come in, which didn't come in. Now, we had pretty watertight contracts, and as a lawyer, I could have easily sued them, but I decided relationships are more important than money at times. So we wrote off that money. And so that was at a personal level, but even in certain transactions I have seen. So when you're doing an acquisition of a company, instead of just an investment in a company, it's very rare that the entire purchase consideration is paid upfront. Very rare. In fact, honestly, in the last 30 years of my practice, I would have seen maybe one or two cases, transactions of this kind. Because the acquirer, they want to safeguard their investment, and they're investing money to build future value. And future value can only be built by people. Right? People are the greatest assets of any organization. So what they do is they will give a certain big chunk, say about 40 to 50% upfront, and then the rest of it will be in structured payments, basis A, lock-in of certain promoters, and B, the promoters have to work towards achieving certain milestones for the company. Now, I have seen instances where, 2 years down the line, there is a dispute between the buyer and the seller whether those milestones were achieved or not. And as a result, promoters' payments were not forthcoming. And there have been instances where the promoters have taken the buyers to court and vice versa. And we are representing a few clients on both sides of the spectrum, depending on who we advise as part of the deal. So, the promoters were anticipating $50 million coming in the entire deal. 25 came in, the balance 25 has not seen light of the day, and the matter is in litigation. So that's why I always say, till the money hits your bank account, don't consider it a done deal.
It's true. I also wanted to ask you about the ease of doing business. Of course, India has seen its ranking improved, but on the ground, how do you see it? Have we really improved? There are a lot of startup owners, founders still complain about this.
See, Janmajay, it's an interesting question you asked me, because there are multiple aspects to this, right? And this is one of the areas where I have a lot of complaints with the government in terms of ease of doing business, because not only do I run my own business, but my job is to advise entities to set up and run their businesses. On paper, we now have a single window clearance, right? Setting up a company in India is ridiculously easy now. Subject,
Yes.
of course, to your name search being available, because nowadays we are facing a real challenge that names are not available because there are just so many companies that a lot of permutation
Yeah, the
combinations
domain
already
mafia.
taken. Yeah, that's that. But so like as opposed to setting up the company in a lot of other countries, including the UAE, is far more difficult than setting up a company in India. But that's the easy part. You set up the company, you get your PAN and TAN. That's the easy part. Then comes your ordeal with GST. And it is an ordeal getting your GST registration.
Why do you say that?
Because even though everything ostensibly is online, but practically the ground reality is that GST registrations fresh registrations are taking anything from 1 to 2 months nowadays.
It's too long.
It's too long. What is the company supposed to do? Because how do you build revenue?
Working capital,
right?
And all those.
You're stuck. And it is not because there is anything wrong with the law. It's because the on-the-ground implementation leaves a lot lacking. And if the government is serious about making India a very attractive destination, they've done a lot of good things. There is, like if you're doing foreign investment, most other than very core critical sectors, everything is under 100% FDI automatic route. You don't have to go to the RBI for approval for anything, for most of these things now. Setting up companies is easy in India. You don't have a concept of renewal of trade license every year that you have in the UAE. So all of those things are great. India's corporate tax rate is very attractive. It's at 25%, which is very attractive compared to other large economies. But, on the ground implementation of things like GST, labor laws, the fear of the labor inspector, so to say, unless that is curbed with an iron fist by the government, our attractiveness as a business destination will be more on paper than on the ground. So it's a reality. It's an unfortunate reality. And this is an example of, holding the government accountable, that the government has failed in this. I mince no words in this. The government has failed. It is not because of lack of intent. It is because of lack of implementation. And unless the government really cracks the whip at the grassroots level, things are not going to improve. And India will continue to lag behind. Given the size of our economy, I don't see any reason why we can't have 5 or 7 special zones as big as the UAE within India. We just have one, which is the gift city, and even that is struggling.
Yeah, true.
Right? So there is a reason for that, right? So policy on paper versus policy on the ground, there is a huge gap. And this is where India lacks.
Execution is the thing.
In every other country, whatever is on paper is what is on the ground. Right?
Yeah.
Every developed economy. But in India, what is on paper, our legislation are some of the best in the world. I mean, look at our Data Privacy Act. It's at par with EU GDPR.
GDPR, yes.
Yeah, it's a phenomenal piece of hats off to whoever
but again,
drafted
execution, because call center people selling data.
Exactly. I mean, we all are inundated with spam calls every day. You go book a car, you have insurance companies calling you for the next 20 days. Now, where are they getting the data from?
My European friends, when they come in and they see in the restaurants people asking for phone numbers. It's weird.
Yeah, it's weird.
Doesn't happen in Europe.
Correct. I mean, but at the same time, ease and convenience in India, UPI, it's phenomenal. I don't remember the last time I wrote a check. I think it must have been at least 4 to 5 years ago. And I've not seen the inside of my bank branch for about 5 years.
Yeah.
So,
true.
So banking in India is phenomenal. I would say it is by far the best in the world. And I say that, with great degree of responsibility, having banked in multiple countries across the world, both personally and professionally. And Indian banking is way ahead of any banking system anywhere in the world. And that includes Japan, China, UAE, US, Europe. India is way better. And the ease is fantastic. Yeah.
So one final question. Any 2 or 3 reforms that you would see that ease things out for India and propel our economy forward.
So, in terms of reforms, I think one of the things that the government has to really focus on is tax reforms in India. There are things that have been done in terms of simplification and rationalization of tax structures, but unfortunately, it's very ad hoc. Because today, when GST came in, the idea was GST is going to replace VAT and sales tax, right? And it'll be a uniform tax across the board. Today, we have a situation where we have slabs in GST. There are certain items that are outside the purview of GST. And a slight variation in a product could attract a different rate of GST. This does not help anybody. There is no certainty. So the government has to be very clear that these taxes need to be rationalized. And there is a lot of double incidence of taxation that's happening when you look at direct and indirect taxes both. So, individuals are paying income tax and there is an expenditure tax as well by way of GST.
Yeah.
And salaried individuals do not have any benefit of expenses that they incur, whereas somebody who's a professional or a businessman for the same expenses gets a benefit. So that is something, the government needs to think about, because at the end of the day, it's going to release more money in the hands of the individuals, which will, boost consumption, boost demand boost consumption, and, the economy will grow. I've read studies where, just a simple tax rationalization could add at least 0.5% to India's GDP, which is, given where our GDP is today, that's $500 billion, right? So getting 0.5% in there. So tax rationalization is something that the government seriously needs to introspect. Second thing the government needs to do on a war footing is fix India's infrastructure. But
that is something that government takes pride in, the infrastructure acceleration.
Yes, but along with quantity, quality is also important.
True.
We've got instances of seemingly world-class expressways. Look, make no bones about it. India's highway system has underseen a transformation in the last 20 years. Those of us who used to drive from Delhi to Dehradun in 8 hours now do it in 2 hours. We know what the difference is.
We will understand.
Yeah, we know what the difference
Gen Zs
is.
may not.
Yeah. So, but then, and it's not just the roads, it's the infrastructure and the amenities along the roads. 20 years ago, finding a clean washroom was a challenge, right? Nowadays, there are these restaurants that vie with each other for having clean washrooms, and they proudly advertise it. True. If you go towards Chandigarh, there are restaurants that are proudly advertising this. So things have improved dramatically. But when you look at things like, roads are caving in one rain, open drains are there. In 2026, a two-wheeler rider falling into an uncovered pothole and losing his life it's a sin.
It's a sin. It's
right?
Unpardonable.
If you want to attract foreign capital, if you want to build an ecosystem of domestic entrepreneurs, developing world-class companies in India, fix your infrastructure. Why is India not the default choice for setting up data centers? Because our electricity supply is erratic even today. We are no longer an electricity deficit country. We're actually an electricity surplus country. We're exporting electricity to Nepal, Bangladesh, Bhutan, right? But our grids are still obsolete. True. Grids collapse. One rain, your transformers spark, electricity goes. So, infrastructure reforms, tax reforms. The government focuses on that. Whoever be the party in power, irrespective, government focuses on that. Within 5 years, I'm very confident that India's GDP will grow up by at least 1 to 1.5 percentage points. And more importantly, see, GDP is just numbers. The quality of life for individuals will improve, which is sorely lacking at least in metros today.
Yeah, cities to be more livable. We have seen this news for the startup founders leaving Bangalore because of bad roads.
Absolutely.
All those kind of incidents. But thank you so much. It's an honor to host you.
No, it was my
Super
pleasure.
informative podcast.
It was my pleasure. Thank you for having me. And I hope whatever we discuss in some form, your viewers find it helpful.
Sure. Thank you so much.
Thank you.